Trading market sentiment. You may have come across the term market sentiment, and you may be wondering, what is the market sentiment? Thankfully, it is an easy term to understand, as it simply means the mood of the market. Now, it is going to help you in your trading if you start to think of the market as a person. This concept of the market as a person is drawn from a book by Benjamin Franklin called The Intelligent Investor. In that book, he describes the market as a person, Mr. Market. In a way, this is a fair reflection, since the market as a whole is simply a reflection of many thousands of individuals. Now, every day, Mr. Market will offer you a price to trade with. The problem is, Mr. Market has emotional problems, and that is reflected in his price. Some days he's manically depressive, other days he's euphoric. Day after day, he is there offering you a price to trade with. Your responsibility is to try to take advantage of his huge mood swings. Sometimes he will be overly euphoric, and at other times overly pessimistic. Now, these times may offer you opportunities to trade. However, you also have the option to ignore Mr. Market if he's behaving irrationally. Now, the key thing to grasp is that you use the market as a servant and not as a master. So if Mr. Market turns up one day in a very foolish mood and you allow that to influence you, then you're in trouble. Sometimes Mr. Market will ignore significant data or fundamental analysis, but sooner or later he can't. And there's a great quote of Benjamin Franklin that's well worth remembering as a guide to the market, because what Benjamin Franklin said, he said, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. It's well worth pondering that phrase of Benjamin Franklin's. So market sentiment is essentially the mood of Mr. Market on any given day. So think about the market as a bit of a moody business partner. Every day you have to assess what kind of mood he's in. And I'm sure we can all relate to people we know whose mood we have to watch very carefully as it's prone to wild swings. This is what Mr. Market is like, and understanding his mood is akin to understanding sentiment. Every session the market will have a mood or a sentiment, and the sentiment can even change throughout the session. The sentiment could be risk off in the Asian session, but then risk on in the London session. Every day the market is digesting information from all around the world, and that's affecting the mood or sentiment of the market. So your job as an investor is to know the market sentiment every time you approach the market. It is so important. If you don't know the market sentiment, you can't really expect to succeed in the financial markets. Let me repeat that. If you don't know the market sentiment, then you can't really expect to succeed in the financial markets. For example, if you're looking to sell the yen in a heavy risk-off environment, you're going to lose your trade. If you simply knew the sentiment for that day, you would have known to avoid that trade, since the yen is bought in a risk-off environment. Mr. Market would be risk-averse that day. So look here on the charts, euro-yen, which is a good pair for risk-on or risk-off sentiment. And if you'd approached on the 23rd of May, if you'd approached that day thinking, oh, I'd really like to buy euro-yen, and it was a risk-off sentiment, you would have been wasting your money. So once you've established the sentiment, you can then look to take advantage of it. Because perhaps the day's sentiment is against the main fundamental driver for a currency pair. In this case, the sentiment may offer you a chance to join the main fundamental direction with a better price. The takeaway piece of advice is this. Sentiment is simply the mood of the market. And I need to know the mood of the market every time I'm trading so that I don't misjudge it. Trade safely, trade wisely, and trade knowing the mood of Mr. Market for every single session.